What is going on, Zinger Nation? How you guys doing today? Welcome back to the show. This is After Hours. I am your host, Ryan Rozbiani, and today we've got a lot to talk about. As you can see in the title, AMC strikes back. We had another fantastic run from AMC. We're going to discuss it as we've been doing on the channel, completely unbiased. So if you want to go out there and get your AMC apes and bring them back, they're more than welcome here. We can discuss it. We can have Q&A, go back and forth, see where things are going, and take things to the next level. I see some of our viewers are coming in. Lee's here. Larry's here. What's going on, folks? Thank you so much for joining us again. You guys are awesome. So just like every show, we'll have three parts. We have first where we go over the indices. Part two where we go over some of the major stocks of the day. So for today, it'd be AMC, GameStop, CCIV, and a few others that I want to discuss. And part three is when I discuss with you folks whatever stocks you put in the chat. As long as you hit the like button, we will try our best to cover as many as possible. So without further ado, let me just pull the mic a little closer. Let's get started on SPY. So I'm actually going to use Webull because there's no major news that I'm looking at for SPY, but I want to discuss it, and I'm a little more comfortable with Webull. So if we jump into Webull, let me just turn off the I want to turn off the 200 moving average because I don't need it right now. And it kind of messes up the skew of my board. So no joke, yesterday we had a dip. So if you've been watching the show on this channel for a while now, you know that I've always been discussing, hey, hedge your positions. We're due for a correction. We're due for a market. I know a correction is 10%. A few people got angry that I said yesterday was a correction. They all got so mad, but they look at the dip, right? It's something, right? It's the market is gone too hot. Now it's coming down a little bit to cool off, and it's coming back up. So we had something happen. You don't want to call it a correction. It wasn't exactly 10%. How much was it? Let's see from the top. That's like I keep saying, like, you got to hedge, and I even showed you folks some stocks. So down 3.4 from the high that we were at. So 3.7, sorry. So not that bad, but still a drop. It's a drop, and it affects these stocks within SPY a lot harder. So Disney, Microsoft, Apple, those took hits as well yesterday. So if you hedge, congratulations. This is where your hedge pays off. Yesterday, all those bear stocks were doing very well, and you could use that to sell off and take some profits and make some green, whether you played call options on them or whether you were swinging commons. You could have done very well amid everyone crying. But what was very interesting here, what I was watching was I can show you the analysis that I did, because last night, so I have a Patreon where I work with, it's a private Discord where I work with a lot of different traders that I have the pleasure of trading with, and we have a lot of fun actually trading together. That's the name of our Patreon. But I did a quick analysis on SPY, and I think I used 404, not 413. So I did a little bit of a longer time frame, about a 2-month time frame was what I did. So you can ignore MACD and RSI for now. We don't need them. You can see that. I'm not sure if we got disconnected. Are we still live? I'm not sure if we got disconnected. If we're still live, can someone comment in the chat? Because I think, wow, my power just went out and came back for a second. So I just want to make sure that we're still live. So if someone could just comment down below, it says we're still live. So I'm going to assume and keep going as if we're still live. Okay, perfect. Thank you, Larry. All right, so I don't know what that was. I just saw a flicker of lights. I heard something, but all right, cool. We're still going. So what's interesting here is taking a look at it, just using some of the indicators that we always use. We don't need Bollinger Bands here, but you can see here we came down to the 50 moving average, and this will be more visibly noticeable on a 1-hour chart, which is the analysis that I gave them. If you look here on the 50, if you use Fibonacci levels, the 50 is statistically the trend that if you break the 50 and you can't recover it, you start going into a downtrend, and then that would have gotten uglier. We would have gotten to a formal correction of about 10%, right? But we held this 420.96, which is our 50% Fibonacci level. So that way we can, that was a good thing. Thank you to everyone who's confirming we're live. I appreciate that. So that was good. So that was the 420 was the number in my head. Then I also knew our 50 moving average was at 423. Now this blue is too dark, so it makes it harder to see overlaid on the black. So I'm gonna make it a little bit of a lighter blue, that like this blue up here, if I can find that blue. Close enough. So 423 was the other level that I wanted us to hit and close on. and we closed above it. So we closed at 424.97, and we closed above actually the Fibonacci level here of 38.2 at 424.96. So we beat that by 1 penny. Still counts, still closed above it. But the 1 hour was where things were starting to get a little bit dangerous, was when around very close to close, around 15:30, which is what, 3:30, we hit a low of 421.97, which is right very, very close to that 420 level, and it was very close to like, hey, I don't know what's going to happen. So where we bounced there, and I was looking into after hours, I told them, hey, look, this level right here, the 425, if we can get over that during pre-market, it's going to be a good day. And I said I'm 60% bullish and 40% bearish. My 60% paid off. So we ran up into the pre-market, and then right at the opening candle, the first hour of opening, we had a nice rally of 0.77, and then the day continued to go up and did fairly well. We had a 1.43% day, and after hours is pretty much flat. Nothing's really happening in after hours, but this is good. But again, this is another prime example. The reason I'm sharing this with you all is this is why we hedge. These things happen. Now, there's two things that have caused this, I believe. It's one, it's a laggard response to the CPI data. If you look here, the last CPI data that we had came out on, I think it was the 15th was when the last CPI data came out. And then we had, a few days later, we had a drop in the market. And then the same thing happened again. On the 12th, we had CPI data. We had 2 good days, and then we had a drop in the market. So you can see that things react a little bit slower now. So I'm sorry, it was on the 13th that CPI data came out. And then things reacted slower. So that's what happens. You just have to be prepared for it. So going to the next CPI, I will hedge heavier in hopes that if a drop happens, I'll be covered. So, but I was happy I hedged. It protected me. Not too much of a massive drop. I was happy personally, and some puts that I had printed very well, so I was quite happy there. QQQ is the next one I want to take a look at, which is our NASDAQ parallel. As you can see here, same reaction. This one is a little bit stronger. It's got the 21 moving average as its support. It broke under it, it closed under it, but then closed above it. To me, tech, I'm surprised didn't fall harder with the CPI information and inflation. But I think that we've gotten to the point where everyone's just got some blind faith that inflation will be fixed on its own, or something will happen, that things are going to be okay. So that gives me a little bit of backstory in this of thinking like, hey, maybe things will be all right. But personally, I think with inflation, I think the craziness will start around September when we see the kind of the socioeconomic boosters that are given to the economy right now, like unemployment, unemployment specifically, when that slows down and gets cut, that's when we're going to see the velocity of money drop, people's purchasing power drop, and we're going to see effects in the market come in then. So that's what I'm a little bit concerned about, is around that time. So we'll definitely have to see it. Listen to Alex, folks. Destroy that like button. I'd appreciate that. Thank you. Christina, thank you for the hearts. I appreciate you. So cha-cha-cha-cha-ching, you said you heard something. I don't know what that means, Lee. Lee, what are you doing to me? You're confusing the heck out of me. We're like 20 minutes, we're like a few minutes into the live stream. The child tax credits. Larry's my outsider information for the White House, insider information, outsider information for the White House. I don't think those child tax credits end this soon, but let me know if you can inform us in the chat. I'd appreciate it. So we did QQQ, we did that one. Next, we got to do IWM. Let's do that one real quick for the penny stock world. Look, we came down very hard, but it looks like the penny stock world is starting to recover as well. So we can see here that boom, we're recovering. Oh, let me turn on my banner because I don't want to get sued. Remember, none of this is financial information. This is all for education and entertainment purposes only. So as you can see here, you've got a nice recovery in the penny stock market, and that reflected in a lot of penny stocks. So we'll see. Oliver's asking, are ETFs safe for long-term investment? There's a lot of people. This is what I say to a lot of people. I say that, hey, individual stocks aren't for everyone, and that's the cold hard truth. Is ETFs can do very well. Like, imagine you just buy SPY. Let's just say you buy SPY and you dollar cost average into SPY. Take a look at SPY over the past, this is a monthly chart, over since 2009, straight up. So I think ETFs are a fine thing to have and use, and some people look down on them, but I don't see a problem with ETFs. I think that if you don't want to spend time analyzing individual stocks, if you don't want to deal with that crap, you can just buy ETFs, and there's nothing wrong with that. And that's, believe it or not, probably smarter. You can balance out your portfolio across all the sectors with ETFs, so I don't see an issue there. So Larry's saying 6 months. So December, we're going to see the child tax credits, wind down. So that's interesting. That'll be interesting to see. So penny stocks, we'll have to see. I want to see if tomorrow into next week we go back into this wedge pattern that we had here, and maybe we do break out and have a small cap summer. We'll have to see. But again, it's fragile right now, so I'm not crazy about penny stocks. I'm sticking to options trading personally. Swing options like a gambler. That's my yeah, Alex. I'm doing options as well. I lost my life savings before you made the disclaimer. Can I please? No, Niraj. The disclaimer is also in the description of the YouTube video. You should have read that. Next, let's go to Bitcoin real quick for our second to last indice. I want to do Ethereum as well because I know a lot of people are in Ethereum, so I want to make sure to discuss Ethereum as well. Bitcoin's been ugly. Look, we had the BlockFi situation come out where they can't operate in New Jersey anymore. Created FUD. Created drops in Bitcoin, went to 29.5 last night. Today went to a low of 29, almost 29.3, 29.295, so 29.3. So it's Bitcoin's very fragile right now. I'm just gonna put it that way. That's the best way I can put it. Could we break this 28.8? Sure, anything is really possible right now. There's not much support here. We have to go to this area to see where the support is. There is, you can argue that there's support at 26. So again, you got your few candles here around the 26 area. What is this? The low of 26? Yeah, so 26 area support here, and then your next would be 22 because there's such massive jumps that were happening. This is a daily chart, by the way. Believe it or not, these were in a matter of days. We were jumping like $1,800, not even $1,800. In a single day. Can you believe that? Now we're lucky if we can just get like $100 in a single day. Let me just show you like how the movement's been in the past few days. Like we're lucky to be like, all right, just we don't want you to go up, just stay flat. Like look, we got $500 here, down 400. It looks like it goes down like here. Now we're going down 1,500, down 1,000, down almost 2,000 points. So it's like $2,000. So it's fragile. It's very, very fragile, and that's sad to see because I'm bullish on Bitcoin long term, but short term, it's very sad to see how it's playing out. Some people are saying it's a head and shoulders pattern. Some people say this is a rounding top that's waiting to resolve. Some people are saying, well, it's no pattern at all. Some people were like, this is a bull flag. We should break out, but it didn't break out. So again, remember, it's also Bitcoin. It's not a stock, so it operates a little differently. Sometimes it operates and follows the charts. But we can look at. I like to look at the 4 hour to see how we're doing short term. It looks like we went into oversold, and now we're slowly starting to recover. We need to regain the 30,000 area, and then slowly make our way back up to 32,000, or we break down and we go to 28. So we'll have to see how that plays out. Crypto will pull back on stablecoin regulation. Yeah, I agree, Larry. I think so too. I think the stablecoin regulation, which is coming, that'll create some FUD. Regulation always creates FUD. Then people realize, okay, regulation is not that much of a bad thing, and then they come back. So it just takes some time. I think Bitcoin's probably going to trade sideways for the next 6 to 12 months. So I just discuss it here in case one day we wake up and something miraculous happens and something really cool happens. So we'll have to see. So we did Bitcoin. Ethereum's the last one. Then we go into the stocks, not Ethan. I do this every time. I always go to Ethan Allen instead of going to Ethereum, but that's okay. Ethereum came down to very close to its support of 1,700, essentially. Let's just round up for mental terms so I can easily pronounce it. Went to 1,718, and then it bounced. And this is on the 4 hours. This is very interesting to see that. But let's see, would you consider this a triple bottom, a double bottom? Would you guys consider that? But again, it's on the 4 hour chart. On the daily chart, you've got almost a clean double bottom situation happening here. Triple if you count this guy right here. So we're watching it very closely. We're going to see how it plays out. I'm much more bullish on Ethereum than Bitcoin right now because of Ethereum 1.5, Ethereum 2.0 eventually coming out, all this stuff. So it's got more catalyst for it, and I'm hedging against Ethereum with Cardano. So I'm purchasing Cardano as a hedge. So we'll have to see how that plays out. It's a liquidating crypto to fight Spirit Bomb. I don't know what that means, but okay. All right, so let's go to AMC. This is the stock that everyone wants to discuss. I got to tweet it out real quick. By the way, while I'm tweeting that out, just do me a solid. Hit the like button. It's easy. It's there. Hit it. Let's have some fun with it. It's there for a reason. So let me just tweet this out. All right. AMC family. So I just memorized the RSI and MACD so I can minimize them, and then we'll cycle them back in as we're going through it. And I just moved to the freaking Fibonacci levels. I'm an idiot. Come back. All right. I thought I had that locked. I don't know why I did that, but all right. Pants off, and I'll do what? Niraj, this is a family-friendly programming. I'm wearing pants. What are you talking about? Can we go over AMC, please? Forget the rest of the junk stocks. These are the S&P 500 and Nasdaq. What do you mean by junk stocks? But here we are. We're at AMC. All right, let's jump right into it. Do I want to use? I'm moving it. All right, moving average, Bollinger Bands. All right, take a look at this. Yesterday we had a big dive in everything. AMC had a big dive as well with everything else. Right, it happens. Like everyone's like, why is AMC going down? Because everything else is going down. So it came down, but it had a clean bounce right off the bottom of the Bollinger Band. Got very close to it at least. 31.15 was the low. Bottom of the Bollinger Band is 30.72. Very close. Hit the bottom. Bounced. So I'm going to turn off Bollinger Bands. And today had a massive rally. So take a look at this. 24.47% massive rally. Overtook the 35.55 support that we wanted. Remember, if you're watching this show, you know that we've discussed this stock extensively. We were watching how it was trading between this box of essentially 50 to 64. 35.55 was our support level that we've been watching for a long time because this is the lowest. Essentially, this was our area of support that we wanted. Hey, we want this to keep. Essentially, we don't even have to draw that. You can just use the 34.32 if you wanted, and it regained it. It regained it handsomely, and it even regained the 41.63 50% Fibonacci level, which is very good. Which means that we didn't break. We broke the 50, but it looks like it wants to fight back and kind of fight the downward trend that we were entering, which is a good thing, which is a very good thing, actually. So I was very happy to see that. OBV, we're seeing volume coming in, which is good. Volume was, as you can see here, volume was on a decline. It's no, you can literally see that on the volume bars there as well. Volume was on a decline, but we're seeing this is now a turning point. So you had this drop here, and now your RSI is moving up, strength's picking up as volume's coming in. So things are getting much, much more interesting with this stock. So I'm watching it very closely. Plan and play Buncon. I'm not a streamer, but thank you, Naraja. This isn't my channel. I'm just a guest. So we'll have to see. This is very interesting. I'm very happy to see this personally. I want to take a look at it on the hourly. It looks like from hour one of open, it just machine gunned its way up. And I think tomorrow gets very, 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 very interesting for AMC. I think tomorrow, if we continue this momentum, volume keeps coming in, we can see a move to the 48 area if we can. But again, look, we're hitting resistance here at 45, which is fair. Look, you can, but you can't. I keep seeing parabolic arc everywhere. I don't see the parabolic arc. Chris, if you could draw me the parabolic arc and send it to me on Twitter, I'd appreciate that. I don't see a parabolic arc. So I have to definitely see I have to see who it is. I have to see what this parabolic arc is. I don't see it. Maybe my eyes are playing games on me. But this is very good. And I'm very happy for AMC, folks, because we were in a drop. This was going down. We all can see the chart. It was dropping and it was coming down quite fast from at least the peak where we were. I want to see how much we came down so I can see how much we have to go back up. So we came down essentially 52 points. And then today we went up 25 points. What was it? We went up 24.5 points. So it's actually, you made up for a lot of your drop today, which is very good. And congratulations. But the momentum needs to keep up. The volume needs to keep up, or you'll have the new shorts come in and be like, all right, cool, this thing popped 24%. Maybe it's time to short it. So you see how people essentially how the hedgies or whoever that shorts these things, how they react is they see massive bumps in the stock. Like, look here. This right here was the quote-unquote short squeeze. It wasn't the mother of all short squeeze. I mean, you got a freaking almost 100% run, right? You had a technical 100% run on this one candle, and we can measure it too. Here it is. What is this? 102% move. Again, it hit resistance at 72.62, so it came down, but it closed at a 95% candle. So technically, it had a short squeeze here. Now, is it by definition a short squeeze? No, but it was a massive movement on a stock with 500 million float. That's a big move on a stock with 500 million float. Look at that. You've got almost $1 billion. You get $750 million of volume that came in for this stock that day, which is massive. And today we had 165 million. The last time we had that kind of move was 143 million. It was a 6% move. So 165 million was a 24% move. So there's more inbound volume. People are more buying than transacting volume. And our average volume for 3 months is 167. So this is on par with that. So which is very interesting, because if you look at the past 3 months, the thing that's really throwing off the volume average is these massive candles that we have here. And looking, I don't have Ortex anymore, but looking at what Ortex was doing, you could see, you could line up some of these green candles where shorts began to cover. Now, of course, they didn't cover everything. Shorts are just like us. They scale in and they scale out. They cover some and they cover not all of it, right? They want to hold some of their position, and then, hey, maybe it goes lower, then we cover then. So maybe they saw like, hey, the stock's come low enough, we can cover now. We've made enough money. So if you started shorting here at 72.62 and the stock is down to what, 30, you've made essentially double your money. So they're like, all right, it's time for us to cover. What's the, like, how much lower can this, do they want the stock to go before they cover, right? So put yourself in the mind of someone shorting. You can only, it's like, it's a greed equation at that point. It's like, how much longer do you hold the short position before you close it? Like, all right, I've made enough money. Because as you can see here, clearly there's new shorts that were coming in throughout this whole time, right? Everyone's saying it. Everyone's discussing it, right? There's new shorts coming into AMC, new shorts coming into AMC. So we can see that. Yeah, the big lease agreement that happened in Los Angeles is also a big deal. So I completely agree with you. That was a big deal. Those are their two highest revenue generating theaters, and they're back. So that's very, very big news for AMC. It was a very positive catalyst. Plus, you have momentum coming in. Plus, you have a massive recovery from a day that had a freaking huge drop that happened. Momentum came back into the market. So it was very exciting. Listen to Fred Garcia, folks. Fred says, hit that like button, my fellow apes and apettes. Listen to Fred. And go get your fellow ape and apettes. I want them to be prepared for tomorrow because we're going to discuss some of the interesting things that could happen tomorrow. So I want to definitely cover that. Okay, cool. I'm getting a picture of the arc that folks are referring to, which is nice to see. Okay. Oh, wow. This is some old school textbook. Parabolic arc pattern. Okay. Oh, I wasn't taking account of this part. I was just looking here. Okay, I see. It comes down, drops, and then it pops. Oh, okay. I see here. Let me show you what I see. So I am going to put this. All right, so I have to play around with Weeble a little bit. Give me 1 second so I can kind of overlay these two things. This is interesting. I didn't see this. This is cool. Okay, now I'm seeing it. So the parabolic arc pattern is A, B, and then comes down hard, C, and then it sees a jump into D. So we have to see this. Silver short pricing, place a target at 62%. The entry at the first peak to 10. Okay, so you've had a bigger drop than 62%, but I guess this is the example here. But no, I see it. I see what's going on here. I like this. Parabolic arc comes down, bounces back up. Essentially, it looks like somewhere around this 50 to 60% point from your low point. Again, this is not a pattern that I'm familiar with. Place a 60% target of the entry range. So this is the entry range, which would be around the 61.8% Fibonacci level, which, folks, where were we right recently? 61.8% Fibonacci level, right at the start of our arc. Things are starting to get interesting now, right? Things are starting to get interesting. This is I'm shocked. I've never seen this pattern before, to be completely transparent with you all. I've never seen this pattern before, but it's a clean overlay of what we're seeing there. And it's matching up with our fib level. So let me test that. So they're saying that there's a possibility to place a target at 62% of the entry price to the first peak. So this essentially your 61.8% Fibonacci level, which is here, which would be their entry price area, which, as you can see here, if algos are going based off of the parabolic arc addition pattern or whatever they're tuning it to, because algos tune to patterns, they tune to many things. I think I saw a familiar face in the chat. Hold on. My buddy Chris is here. Chris, what's up, buddy? Thank you so much for showing up, man. I appreciate you. But no, this is cool. This is cool. I wanna do this trading parabolic arc. I want to see if Investorpedia has a page on these guys. Trading parabolic arc. Okay, it doesn't. It looks like this is the only page that has something on it. Who is this? Moneyshow.com. I want to see if there's by definition, like the textbook definition of a parabolic arc. Okay, so it runs up. That's your stop. That's where shorts open up their positions here. They would stop out if they go that high. The target is to come down here and add, and then it has a small run up of about 2 fib levels. It looks like, if I'm understanding this correctly, it's 2 fib levels. But again, this is a pattern that I've never seen before. Here we go. Parabolic arc, the closing 24. The parabolic arc resulted in another corrective phase to the upside to a bounce to 62% level near 3.38. So let me see. This picture is so old. So it came down, bounced to 3.38. So it's saying it's going to have a 62% upward movement from there. So let's draw it. So I'm not going to count this wick down here. I'm going to take it from the 61.8 area and run 62% up, or as close to 62% as I can, right? Okay, so I did 62.5, just a little bit of a buffer. You know what? I'm going to do 60% just to give myself a little buffer and to account for that wick down, in case by definition you need to account for that wick down at the entry price. Again, this is not a pattern that I'm familiar with. So let's go one more time. Oh, perfect. 62% right on the dot. So that puts us where? Around $52, which is very interesting because the $52 area is right where our previous support was. Remember, we had a line here in the past. I'm going to return that line back to our chart. If you remember, we had a line here, which was one of our support lines for this stock when we were discussing it very, very, very long ago. We had that line here, which is around the 51, 52 area. Again, having an orange line amidst the red and yellow line is very bad visually. So I'm going to change the color. I wish I had pink on here. Pink stands out like the most on overlaid on black. And now I'm just having fun here doing nothing. And we can see here around the 52, 51, 52 areas where we would again be entering. So you'd be, your previous support, which it was back then, would act as essentially your resistance, which gets very, very interesting on this parabolic arc pattern, because at that point, we would have to break 52. And then if you break 52, you can go for 58 and 64, and then you can go for all-time highs after that. So this gets very interesting. This is a textbook. Again, I can't confirm or deny this is a parabolic arc pattern, but right at like first glance, you guys are seeing what I'm seeing. Parabolic arc, runs up. Again, this is brutal to read at how hard it is. Hits the top point. You draw the Fibonacci levels from A to B, right? Which we did from, it says here, fibs from A to B, which we did from the bottom of the arc to the top. Now, again, you might be saying, oh, Ryan, draw the arc a little lower to 8.9. We don't need that. That's okay. It's okay. It's very hard to pinpoint. Like, you could say this is the start of your arc. Downward, we could say that that's the start of the arc. Maybe that does something, but let me see. Let me retrace it a little bit and see if we can get a little bit more textbook, textbooky. And then this 35.18 line overlays with a 35.55 line. So I could just pop the 55 line right there, and then it returns us above now if we're going from our entry zone, which they're saying our entry zone, and you just see it again one more time. Enter a short trade. Okay, so it's saying enter a short trade, the first peak, and then place a target 62% of the entry price near the price peak of 10. Again, it's so hard to read this image because it's so blurry. Here, let's see what these guys have to say. This is Riot Blockchain. Riot Blockchain was trading in a parabolic arc on September 24, 2020. Can you believe it? Riot and Mara used to be single-digit stocks. Now they're just double-digit stocks, and everyone's like, this sucks, but you should have bought it at the right time then. Run up. And then now I see why, okay. Now I see why people are like, it's coming down to $8. It's coming down to $12 because the parabolic arc. You also have to take in support and resistance points as well. But this played a textbook definition of a parabolic arc. It looks like, from my understanding of this, again, this is my first time seeing this pattern. I'm trying to learn it on the fly with you folks. So we'll have to see. We'll have to see how this plays out. It's interesting. It's exciting. I'm happy for the AMC folks in this play. I don't tweet about it much anymore. I tweet about the chart sometimes when I can. I'll tweet about it because I know a lot of folks, you get a lot of BS on social media from people. Even if you're talking positively about a stock, you get some BS from people. Alex says, if it gets to 64, I see a squeezy wheezy being triggered. Alex, I think a squeezy wheezy happened today. This is the thing about short squeezes is you don't squeeze out all the short sellers at once, because all short sellers don't enter a short position at the same time, right? Someone who entered a short position up here and the stock tanked isn't going to get squeezed out by today, right? But someone who entered the short position up here still won't get squeezed out by today, because hold on, let me retrace that. Someone who entered a short position here will get squeezed out today, right? Those guys get squeezed out. But these guys who entered their short positions here, around this, above where you are now, won't get squeezed out. Whoever decided to short AMC here got toasted on this day, right? They got smoked out. So it's got to be a bunch of new. I wouldn't even consider any shorts below this line here. I would say they all got toasted, or they're getting like smoked out right now, right? So I would say anyone who's above this line is still fairly okay. Like they can cover. Like if you shorted the stock here and then it dropped, you cover here, and cover here realistically to make your money back, right? You want to start covering, because the name of the game with shorting a stock is, let's say I bought AMC at $10. Let's say AMC is at $10. I'm saying it's going to go to $5. I shorted at $10 in hopes that it gets to $5 and I make a 50% profit, right? So I'm going to technically go in there and sell the stock out to someone else. And then when it goes to $5 and they're going to sell it, I buy it back from them for $5. I essentially give them back $5 and I get to keep my $5. Like, you make 50%. So the name of the game is you want to short at the top. That's your maximum profit areas. You want to short at the top. So whoever's shorting at 72.62 is doing very well right now, right? And if they're smart, they'd be covering along the way, because essentially a lot of these that we did last time in one of our streams, we saw that there was micro coverage that was happening across the board here. AMC is going to fly. Hedges must buy back. I don't know about that. I don't know if hedges must buy back or anything of that sort, but we'll have to see how that plays out. I'm not 100% sure about hedges having to buy back. Give me 1 second. Sorry about that. But no, AMC is looking good. I want to go to GME next. I want to talk about GameStop a little bit more. We talk about AMC a lot in this stream, and I love it, and we'll come back to it. After hours, it looks like it's having a little bit of trouble. Oh, I forgot. We just put a massive box on the chart, and I was like, why is everything so gray? Let's go to the 5 minute. No, it's holding. It's just a tiny bit of red. I mean, it may look, after hours volume dies. So when volume goes down, you also lose momentum. But then you have tomorrow, right? You have pre-market tomorrow. You have actual market again tomorrow. So there's a lot that you can do. Do you see any pullbacks tomorrow so I can add more? KB up. You have to watch. This is the thing with momentum stocks. They're very, very, very hard to chart, right? You have to. And you can see even here, like, we're pulling out patterns. I've never seen parabolic arc pattern before. Personally, like, I've never traded a parabolic arc pattern. I've never, because I don't short stock. So I'll play puts, but I don't short stocks. So to me, this is interesting. This is very interesting to see, like, a pattern. Like, everyone kept saying parabolic arc, and I was just thinking like a mathematical parabolic arc. So it was like, oh man, I wish lasagna and orange chicken, Niraj. What the hell are you eating for dinner? I wish lasagna and orange chicken. Throw one in the chat if you think lasagna and orange chicken would go well together. I think it's setting up that they can't short this any further. They have to buy the shares. Jason, I agree. I think if we go over a certain point, if you want to have a profitable short position, right? Because the whole point of this is to have a profitable short position. And when you're shorting a stock, you have to make money, and you're paying interest every single day. Now, these guys might have the equivalent of infinite money, but infinite money gets burnt out too. 102. I don't even know what that. Don't put your phone number in the chat. Neil Patel's trolling. I love trolls. Trolls are having fun. Neil, you do you, buddy. If that makes your day happier and you're having a bad day, you can troll away. But no, I get it. Like, I think this is the key line here. If we go back to trading in this box, like, momentum returns to AMC. So I think that this is where things get interesting. Is going back to the 5182 level is when things get interesting. First, again, this is what I say about every single stock. I say that you have to take it step by step on the way up as well as on the way down, step by step, right? Your support levels, your resistance. We got over 42.33. After hours, we've surrendered it a bit. We didn't close above that 42.33 area. Oh, I'm sorry, we did close above the 42.33 area. We have it in after hours. We want this to hold. We want this to hold into pre-market hours. Next level would be 42.32 would be where we want to kind of, 49.47 would be the next part that we want to kind of go to. But before that, you have one resistance, which is here, which is your 21 moving average at 48.27. This is where Bollinger Band theory kind of comes into play, is you're returning to the mean, which is the midline, which is your 20 moving average, is the red line. So I'm going to turn off the moving average lines and just have Bollinger Bands. So you can see here, we're returning to the mean. We bounce to the bottom, we're returning to the mean, which is 47.90. We get over the mean, you can get and break and try to break through these support levels. But again, it can happen in 1 day. It can happen in 9 days. So can you examine the rise from 39 to 44 happen so quickly? Can I examine it? Yeah. What do you mean by examine it? Oh, you mean like on an hour, on like a 30-minute chart? Sure. Massive run up. You had a very good catalyst come in. Your biggest two earner theaters in California opened up again. And then you could have shorts that just decided to cover. That's also another thing. Shorts cover. They don't want to be in a short position forever. The same way that we don't want to hold a stock forever. I don't know of any life-term holders of short positions. I know people hold stocks life-term, like I'll buy Disney stock and hold it till I'm 90. Or people do that, but I don't see people doing that with short positions because it costs you money to have a short position open. But look at that. It's a massive run-up. I don't even think it was. I think it was above VWAP the whole time. Oh, there it is. Yeah, look. Right above VWAP. Just rode that right up as support, which is great. Uptrend, massive uptrend. Congratulations again. This is a great run up. We just have to hope that it holds into tomorrow. And then if that holds tomorrow, you want to take the mean over tomorrow, which means you want to take over. What do you think about the LinkedIn post from analyst Peter Hahn? Buddy, senpai, I have no clue. I don't even know who Peter Hahn is. I couldn't care less. Jeff, my man, what's going on, Jeff? Thank you so much for coming and watching the stream. Love orange chicken, but I wouldn't eat it with lasagna. Same here. I don't get it. Like, maybe the raw noodle part of lasagna, I get that. But orange chicken with lasagna, like actual lasagna, doesn't make sense to me. But hey, I'm down to try it. We can do a whole episode on that if you guys want. But no, this is cool. I want to go to GME next. GameStop. We're adults here. We don't need the banner. You guys know what we're talking about. We're talking about GameStop. I longed today at 39.05. So so you longed the stock. Oh, cool. No, congratulations, man. You're doing fairly well. For 1 day, it's doing fairly well. GME, same thing. Look, again, we haven't done massive analysis on GameStop, and GameStop has clearly been in a downtrend. If you can see here, we'd have to actually redraw our Fibonacci levels here into a downtrend because the stock is broken the 50% level, so we have to go from our high to our low now. Which I want to kind of get a little bit better here. Okay, cool. So you can see here, this one was trading sideways for a while around this box between these two levels, 202 and 229, and it broke these two levels because essentially a lot of folks are waiting for a catalyst, which was, hey, what is the NFT situation? And we haven't heard about it yet. That's the thing, is they keep talking about, they put up that website. Everyone wants to know what the NFT situation is. Earnings are coming up. Did they make money? Probably not, right? Because it's GameStop. They don't make money. And I can show you here. Their net income's in the negatives. It's been in the negatives for a while. Now, it's not a bad thing. The cash flow's in the negatives. They've got cash now because they've raised money. They've got revenue coming in. They've got some profits on the books, but they're still negative EPS. They're doing better than where they were before, but they're still negative EPS. Okay. So it broke below the Bollinger Band, regained the Bollinger Band. Yesterday it was green amid everything being red, which is why everyone's like, it's got a negative alpha. So it had a nice 2% day, 2.6% day, and today had a 10% day. So as you can see here, this one returned to the mean. Okay, so we can see we bounced off the bottom, and now we're returning to the mean, which is our 20 moving average, which is nice. But tomorrow it needs to get enough momentum to regain that. So the volume is picking up from where it was. It's not massive, but it's good, but it needs volume. That's what the thing needs. It needs volume. Sorry about that. I don't know what just happened with my camera. Yeah, I'm sorry about that. I had my connection, my USB hub just popped out. Yeah, listen to the folks in the chat. Listen to Larry. Listen to Crystal. Smash that like button. Smash the like button. Let's get the likes up. Drop a like. Let's have some fun. GameStop's doing good. GameStop's doing very good. It's a return to the mean, which is a very bullish signal. Sorry, it just took me a second to wrap my head around it because this isn't one stock that I've looked at a lot. So it takes me a second I want to look at it like short term, long term, and see how it is again. Is this also a parabolic thing? No, because this broke. Had this bounced around this area as well, like AMC did, they would have been a similar pattern. Now again, textbook definition. What are we looking at here? I personally don't see a micro. Again, you could say that this was a bull flag, maybe by definition. Again, I'm off right now. So this is interesting. We got to see it tomorrow. We got to return to the mean. That's the big thing. You want to overtake the mean, which is the 195 area. We overtake that. We go to the next level. We see where that is, and then we take our next moves and we go from there. So if we can take this mean, which is 195, then we go for 202, and then we return back to our trading block. The same thing like AMC. So let me just put AMC side by side of this so you can see it real quick. There, here, AMC. You can see here AMC. Also, we want that to return to trade within our box. Now, AMC has a higher trip to take before it gets back up into its box, but GameStop can get back into its box by tomorrow. So we'll have to watch that very closely. So this is exciting. This is very exciting. By the way, there's 433 of you awesome folks in this chat. We have 70 likes in the like button. Can 30 of you light that thing up, get this thing to 100 likes? Believe it or not, we are the second highest viewed program on the network here every week. I think at last I checked, we're doing very good. So I'm very excited to smash the like button. Let's do some good numbers. I see producer AB. Do you want to join us, AB, or you? I don't think he's got headphones in. I don't know what's going on with it. I think AB's coming in. Let me get my headphones. I think we got a guest coming in, folks. Hang tight. I think it's the CEO of GameStop is coming in hot. Hit that like button. No, I'm just kidding. He's not the CEO of GameStop. Aaron, are you coming in?
I'm just trying to get my AirPods connected. Give me 1 second.
Okay, sure.
Always
While Aaron's connecting his AirPods, let's get this video to 100 likes. We are about 10 likes away from 100. Light that thing up. Let's get it there. There's 450 of you in here. We've been talking about your two favorite stocks forever now. Light that thing up.
So I talked to Daily Motion too. It's got more details.
Okay. Cool. So as you can see, both of these are doing well. We're gonna get there. You just got to give it time, give it volume, be patient with it, and always protect yourself. Minimize your risk. If this isn't something that you can stomach a 100% fall or a 50% fall, protect yourself. That's all. Just do whatever you can, do whatever is best for you, and take it from there. What else can we discuss? I want to discuss CCIV real quick because I promised I would, and it's emerging very soon. So CCIV, Churchill Capital, another stock that has its own little box and trading area here. So let's turn on MACD RSI. I want to see when is the actual merger. I think it's on the 27th, if I'm not mistaken. They're merging in 7 days. Let me just give it a quick Google. Merger date, CCIV. CCIV merger date. So July 23rd. It looks like it'll be merging. Chat, please do me a solid and confirm if that's correct. July 23rd. So that means in a few days. 3 more days. So end of this week. No, that makes sense. They do it on Fridays. So that
I'm seeing July 22nd in the chat from Chris Kachi.
Okay, perfect. I trust Chris over what I saw. Okay, perfect. So 22nd, and then that means 23rd. They're going to change their name to Lucid, LCID. And we got the big run up into. You're going to have a small, biggish run up into your merger. That happens all the time. That's the thing here. This is a stock that is loved by a lot. It's become quote unquote a cult stock. We saw its massive run up before the definite agreement happened. Definite agreement came in that day. I think it was a Tuesday. Massive drop. I think this is a 60% drop or something like that. We had, and from where we were to where we came down to eventually before we started bouncing, 63% drop there. Left a massive gap in the chart here of about 20%, which we don't even need to look at right now. I think we come back to that in a few years. And then you can take a look here. It's picking up. It's picking up. Yesterday, it had a rough day, just like everything else, but it's picking up. And I think that it continues. It's nice. It continues a nice little move into the merger. But I do think that to be 100% transparent with you all, I think that after the merger, it cools off, just like everything else, just like most of other stocks that merge and they have a nice little run up, then they cool off. So keep that in mind. That might be a great buying opportunity. I got something stuck in my eye. That might be a great buying opportunity for you all at that point. Those of you that want to load up massively, maybe we come down back to the $20 area. We come back down to the $17 area, $16 area, $15 area, whatever it is.
Yeah, I mean, I think that, it could be a classic sell, buy the rumor, sell the news, sell the event. Once it happens, we could see a little sell off. But I like a few things. If you're just talking about trading CCIV, not a bad stock to trade, like get in and out of quickly, because it's been kind of trading in this range since it ran up all the way to, what was it, like $50?
I think no, 64.86.
Oh wow, even higher than I thought, 64. Yeah. But outside of just trading it, I think I do like this stock just as like a long term, buy and hold. But I think it'll be interesting to kind of see, as we see more EVs get into the market, which section of the market each kind of company will own, right? So you have Tesla, obviously, right now. I don't know if you've been seeing, Ryan, but we've been seeing a lot of commercials for Volkswagen. Some Volkswagen, they're putting out a SUV that's all electric, and they're saying it's the first all electric SUV for everyone. So maybe Volkswagen has like the cheaper electric cars, and I know Lucid Motors is trying to be kind of the luxury, more luxury one. But I see Tesla already as kind of a luxury EV brand. So I think
Tesla's in the middle. Tesla reminds me of Toyota. Tesla can play with the cheaper car, but can also play with the mid-range car and the expensive cars. Like Toyota has like Acura, whether it's like Toyota is their cheaper cars, they're more socioeconomic friendly cars, and then you have Acura, which is their luxury model. But Tesla,
Toyota's luxury model is Lexus. I think Acura is someone else.
Then Acura has to be Honda, then one of those, something like that. So exactly. You got Lexus and Toyota, and then you got Honda and Acura, and so you have them. But Tesla doesn't need that. Tesla just goes, okay, here's our new Model X.
It's the same thing with Volkswagen. They have the Volkswagen EVs that are supposed to be more for like the everyday man, but they also have Audi EVs, which are going to be a little more luxurious. But like I said, I think we'll just wait and see kind of which corner of the market these different EV companies will have. And who knows, maybe there's already too many luxury EVs out there, and CCIV doesn't capture like a big thing of it. But I think there are a few different interesting EV plays. CCIV, NEO. Another one that I don't think people have been talking about a lot is Warren Buffett is invested a lot into a Chinese EV maker. I believe that the company is BYD. I don't know what the ticker is.
BYD.
The ticker is BYD. Or no, it's OTC Markets, BYDDY. But this is one that Buffett's invested in. So that's,
I don't know these guys at all.
Yeah, I mean, this is one to look at just because you know, if Buffett's into it, then there's got to be some good things going on. You know, he's not picking a company that doesn't have.
I've never even heard of these guys.
Yeah, it's actually one. If you go to Buffett's holdings, it's like I think 5th on the list of as far as like how much, you know, dollar value he has invested in companies. Apple is first. Kraft Heinz is up there, and then
okay.
BYD.
So this is more. This looks like it's more in like the trucking and industrial side of things, like with buses, trucks, forklifts, sky rails. Looks like it's in that realm rather than like cars.
That rather than like you know, or not commercial, rather than consumer vehicles.
Yeah, this is more commercial. Exactly. That's the word I was looking for, which makes sense. The commercial side of things make way more money. You buy in bulk. You're seeing like all these SPACs would come in and be like, hey, we've got $1 billion of orders. Like Arrival has like $1 billion of orders from UPS for their mail trucks. So you can see that. But I think that in the realm of things, it comes down to survival of the fittest at the end of the day for all these companies and who can execute. Right now, Tesla's executing, Volks is executing. There's these cars are in the market. If CCIV can execute, I think they'll do fairly well. They're in this upper luxury brand where the cars are very expensive. But they're also like luxurious looking cars. If you look at like a Tesla Model 3 and a Tesla Model S, right? The inside outside, it's very similar. And I'm a Tesla bull, so I love Tesla. I have Tesla stock. I love Tesla. But it's like, to me, it's like, it's not the luxury car, right? It doesn't have that Rolls Royce feeling to it. It doesn't have that get in this car, feel like you're inside of a cockpit of a first class
The Tesla you're talking about right now?
Yeah, I'm talking about Tesla versus Lucid. Lucid has that feeling.
I think, I mean, the Tesla Plaid, I think, is pretty nice on the inside. I think it has more of like a race car feel than necessarily like a luxurious Rolls Royce type feel. But the one thing I think with Tesla that kind of bothers me is Elon Musk talked about like 8 years ago putting out a car that with a price point of like $30,000 for everyday people, and I don't know if they ever really hit it. So I honestly tend to think that Volkswagen will be able to put out a cheaper alternative for just like like an electric version of a Jetta for 25,000 to 30,000. I think that will be more feasible.
Whoever does that first wins the game, because that's what consumer markets are waiting for.
Because if you're if you're trying to buy a new car, Ryan, and say you have like that price point of like 25,000, 30,000 in mind, and you have the option to buy an electric one versus a gas one, and you can save all that money on gas, who wouldn't want it? And I mean, although there are aspects of Tesla's cars that are very great, like they're like literally the safest car. They're rated one of the safest cars on the road. But I think some of these developments that we'll see in EV, it'll just take time to really understand.
We're still in the infancy of it. This is what a lot of folks don't understand. It's like I saw a comment in the chat that says, why is NIO not an $80 stock? Take a look at how long it took Tesla to ramp up to get to like a high double-digit, triple-digit stock. These things take time. These companies still have to prove themselves. They still have to show that they can make some form of money. Now Tesla does it via EV credits. I get that. But you also have to remember that if you look on the market, the ICE engine is still the dominant player because of two reasons. One, as producer AB was saying, was the price point situation. Not everyone wants to go out there and spend $60,000 to $70,000 to $80,000 on a car, especially an EV car, because it comes down to pain point number two, which is charging it. Folks, sure, you can plug it in at home, but like in these massive cities, like in New York City, where am I going to plug in my Tesla when I'm parking it on the side of the road overnight? I'm going to have to go to sit in a charging station for 3-4 hours in hopes that it charges, right? So there's a lot of pain points right now in the EV markets. That's why I think that we got a little bit excited with the EV market. So it was like everyone's like Fisker, Lucid, Tesla. Now Polestar is the new one that everyone's talking about. So all these awesome EVs, they're going to be great, but I think it's going to take some time to get there. That's why I'm being very patient and meticulous about buying their stocks, because you have to remember, especially with SPACs, once they de-SPAC, it comes earnings time. Oh, cars aren't on the road yet. Cars won't be on the road yet till next year. Earnings are going to look ugly. Stock price is going to look ugly. Lockups happen. Warrants happen. So there's tons of opportunities to get the stocks for much cheaper. So especially if you're in the SPAC, like Arrival, for example, that's one that I had like near NAV, and then I sold it on the run up because I was like, they've got warrants, they've got a lockup, it's going to come down, it's going to get cheap, then I can buy it. Take a look at the chart. Look, I bought it around here once the first rumor started coming out, around $12. Sold it somewhere here. I don't remember exactly. I didn't sell at the top. I don't want to lie to you and say I sold it at the top, but it was in the mid-20s was when I sold. And then it ran up higher. I'm like, I'm an idiot. I should have held. But then I'm like, all right, you take a look at the S1 filing. You see there's warrants. You see there's a lockup. You see that, surprise secondary offerings can come in. Stock tanked, came down to 1250. Stock's now slowly starting to recover, but there's always opportunities to get in. You also have to remember when earnings come out, take a look at this. When they had an earnings report of, what does it say? Amount zero, revenue zero, the stock took a dive. So you have to remember that these guys aren't making any money yet. So it takes some time, especially if you're playing in the SPAC world, take some time to find the ones that are making you money. If you want those, get into those early, but you can be very patient because with SPACs, you have two negative catalysts, most of them. A lockup agreement for the pipe investors, as well as warrant redemption that can kind of kick in. So definitely keep that in mind and read the S1s. That'll help you find opportunities to get in. You don't have to always buy up top because right now there's someone who's holding a rival at 37.18 who's pretty pissed.
Yeah, a couple things out of the chat I got to address real quick.
Sure.
Let's see. We had someone in the chat saying that the BYD is a gaming company. Yeah, ticker BYD is Boyd Gaming Corporation. Wow, that was up 5% today. So maybe it'd be interesting to look at that. But the company I was talking about, BYD, the Chinese manufacturing company that Buffett is into, the ticker is BYDDY. So it's an over-the-counter stock, at least right now in the United States. But look, I mean, I would feel good about throwing some money in BYDDY, not necessarily as a trade, but just a buy and hold.
Which is interesting. I can see why Warren invested into them. They're paying a dividend. It's nothing. It's 4 cents, but they're still paying something, right? They're paying a dividend, which is better than nothing. But
and I'm very
interested to see him invest. He probably had to have this at pre-IPO levels or somewhere down here in the 8-7s.
Yeah, I think Chris said that I think Chris said that he owns about 10% worth of the company, so definitely a big player in that. Mm-hmm. And there are a couple other EV stocks that are making more commercial, Workhorse, mm-hmm. Hyliion, who we've had on mm-hmm. SPACs Attack. That's an interesting one. But, I agree with you, Ryan. I think we just got to kind of wait and see which companies establish themselves in the market and see what they're able to do. And people are also talking about the infrastructure of a charging network throughout the country. Mm-hmm. And there are a bunch of different plays in there that ran up when we had that big EV boom. What was that, back in like January?
Yeah, with the infrastructure bill, everyone got excited because.
I'm talking about the original like EV bubble. You
mean so when ChargePoint went to like $50, right?
Yeah, exactly. What was that back in January?
Late December, early January. Yeah, so that was predominantly fueled by because Biden was elected, and then his thing was within the first month, I'm going to run an infrastructure bill. 500,000 charging stations was the headline we keep seeing. So charging plays ran up. You had ChargePoint run up. You had Blink run up. Everything was just massively running up. And then we all know how Congress works. Slow as heck, and dropped all the way down to 18. And they recently did something. They did some form. It wasn't an offering. It was someone who had 12 million shares that wanted to sell, and that induced some FUD into the market and caused another drop. But now it's slowly starting to recover. It's becoming an interesting play. I like ChargePoint a lot. I like their network. I like what they're doing. They're expanding fairly quickly. They've got good contracts set up. So for me, this is a long buy and hold. But I'm someone, again, who bought into this back when it was a SPAC. So I saw the numbers. It made sense to me to buy into it around the $10, $12 area. So I said, okay, this is SPAC. I'm fine buying and holding it. And, of course, sold some on the way up. Again, it's some with these SPACs. That was when SPACs were hot.
Right.
Things were getting they were just running. But now we're seeing SPACs have come down to earth. They've kind of calmed down a little bit more. So that's quite interesting to see now.
And then I also see Daniel in the chats asking about jobs at Benzinga. Daniel, please email powerhour@benzinga.com. I'm going to throw that in the chat. And just with bullet points, real quick, try to break it up and just, say what you think you can do or what you can contribute to the company and help us grow. Send us an email and we'll review it and get back to you. But definitely do that. And let's see what else we got in the chat. Someone's saying Ford. He thinks Ford will be good with EVs. And yeah, the Ford, the Lightning truck that they put out looks pretty cool. I think and Ford's doing other stuff beyond just the truck. They have the Mach-E Mustang, all these things. So yeah, I mean, I think as we see more and more companies get into the EV space, it will just take some time to kind of see who is able to carve out a little niche for them in the market. Yep, exactly.
And there's a lot of players coming in at the same time, which is, it's going to get interesting if the infrastructure bill contains those tax credits for EV purchases, like we had back in, I want to say 2009, 2010, where they gave you like a $3,000, $2,000 tax redemption credit if you bought like a car before 2010. They were kind of trying to get the gas guzzlers off the road. And now there's talks that, hey, there might be a $10,000 tax credit. So that essentially it's like a $10,000 coupon off the sticker price. And who's really out there? It's like, what cars can you buy that are on the market now? That's when things start to get interesting. And what's really interesting is I'm actually seeing a lot more Teslas on the road since the pandemic started. So people are shifting slowly to EV, but it's still going to take some time and patience to get there. And I think that these EV credits, if registered, will help tremendously in the shift to EV cars.
Right. And I do see talking about, Chris is mentioning that EV or Tesla might open charging stations, could be bad for ChargePoint and others now. And yeah, I think someone anonymously from one of these, whether it was ChargePoint, Plug, from one of those companies, said Tesla is like so far ahead of us in their charging capabilities. But I don't think it's determined yet exactly how that's going to look. Like, is Tesla's charging stations only going to be for Teslas, or will they have a universal charger that works on all cars? I could kind of see it being a thing where Tesla's chargers are like Apple's, where they are only for iPhones, they're only for Teslas.
Right now, they only work on Teslas. Right now,
and then everyone else will be like on the universal one. I could see that happening.
So they'd have to install some type of adapter at their charging station, so you can like put that adapter on and then charge your car with it. Because most other cars have the same like you can go to a ChargePoint, you can go to a Volta charge, you can go to anyone, but Tesla only charges Teslas.
Oh, Chris is saying that Musk said that they would allow other EV companies to charge there as well. So yeah, I mean, it will take backtracking on what's current. So that's a new development that I didn't know about. Thank you, Chrisopedia. We might just have to get him on the show. He's got all the info. Chrisopedia, he's the man. But yeah, I mean, there is a lot of developments to be had in this space. And as of right now, Tesla is still the forerunner. There are other companies battling Tesla, trying to get. Oh, Joe saying just in China. Interesting. All right. As I was saying, there's a lot of developments to be had. We will see as they play out. Ryan, we also got Netflix earnings coming on right now.
Yeah, they ran their earnings. They ran their earnings came out today for Q2, and they took a dive after hours initially, but then they recovered. It looks like fairly quick. Look at this. It dived to 496, and then it came right back up, which is weird. But again, it's earnings, so it happens every single time. So I can pull them up on Benzinga Pro and see what I know the conference call is in progress, but those calls, it's the main big thing with these guys is, hey, we want to move to gaming. We want to talk about the games. We want to move to games. But I don't think it makes sense for them to move to the gaming world. It doesn't. I don't know how that translates, because a lot of people are saying, hey, or at least what I was reading or seeing was that a lot of the viewership happens on televisions and laptop screens. Now, what are you going to do? You're going to develop games uniquely for Netflix, and people are going to come and play like the Street Fighter equivalent of Netflix's Street Fighter equivalent on the Netflix platform. What is that going to cost you? How long is that going to take to develop those games? Because you can't just develop these games overnight. How long have they been in development? So it's kind of an enigma for me personally as to how this thing's going to move forward.
I think a lot of companies have tried to figure this out, how we can stream games. Like, will someone have to go out and buy a Netflix console, or will it have to be on their PS4 or Xbox already and you download it? I think if there's any company that is able to figure it out and make it a good product for consumers, it's Netflix. So I wouldn't put it past Netflix to really be able to execute on this well. And I think it does open up a whole new side of the business. Right. I mean, I don't know. I mean, like, you have all these other video game companies that some of them I like. Like, I like Roblox long term. I really like Take-Two Interactive, which has been kind of getting hit recently. Activision as well. So I don't think it's good for those companies if Netflix is able to get in and really execute this. So it will definitely be something to watch. And I'm sure we'll get some more clarity on their earnings call right now, which we are. We are streaming that live actually on our Benzinga YouTube. If you want to check out the earnings calls, we're doing that right now. But stick around with Ryan and I, and once we finish, we'll direct you straight over the Netflix earnings call.
So they missed the EPS, came in at 297 versus their estimated 315. So that makes sense. The drop that happened. They beat on sales 734 versus 732, which is good. They finished the quarter with 290 million paid memberships. And they gave us guidance that they see 225 to 2 versus 217. So they increased their guidance. But they increased their guidance on EPS, but they decreased their guidance on sales by marginally, which is all right, cool. I guess that helps. And since they've added 1.5 million paid memberships in Q2 ahead of the 1 million forecast. So again, looks like they did very well with the numbers here, and they're looking to do better as things are going. But to me, again, you're very bullish on the gaming side of things. I'm very bearish with that. I think that it's going to be an uphill battle for a company that already has a money burning problem. And this is just going to add more fuel to the fire and cause them to burn more money. Now, if they go out there and work with a Roblox or with a Unity or with the Take-Two that you were suggesting to develop games for them, sure, that would make sense. But them developing raw games and building out a game development platform is going to get much more difficult, in my opinion. Now, we'll have to see how that goes, but I don't know. I don't personally, I'm not too bullish on Netflix into the future, especially with other platforms like Disney Plus coming in and starting to do very well, to the point where like they're cutting, like they're hurting the movie theaters now, to the point where they're like, hey, you can just watch Black Widow at home for the equivalent of 2 movie tickets, and people are doing that. They had 60 million in sales for just Black Widow's movie tickets at home.
Skippy, yeah, the Disney Plus, that was so impressive what they were able to do with Black Widow. I love Disney. I mean, it's expensive right now, but I mean, depending on your time horizon, if you're just gonna buy it and hold it for 10 years, and I love Disney. Skippy's saying I like the worst gaming companies. Look, I like Take-Two based off, like, they have really strong financials. I like
What's
Roblox, TTWO. And so Take-Two has a few things going for them. So right now on Twitch, Grand Theft Auto 5 is still one of the most watched games on Twitch. And Grand Theft Auto 5 is just making a lot of money based on people buying skins and other in-game purchases.
Mm-hmm.
And the game is 10 years old. So they're still milking a product that is 10 years old. And then, going forward, you will have a GTA 6 catalyst at some point. I think they've finally announced a date in like 2026 or something for Grand Theft Auto 6.
Really?
But yeah, but Take-Two, I mean, I don't know.
These numbers aren't bad. These numbers aren't bad. Their gross profits got better, even though the revenue dropped. Their gross profit margin went up. That's good. Their cost of revenue went down, which is fantastic. That helps their margins. I don't see an issue there. The net income went up by 100 million. These are in the millions. Take a look at their balance sheet. They did burn some cash, but again, spend money to make money, right? So
right. I like Take-Two. I like Roblox from its growth standpoint. I don't like Roblox has been very volatile since its IPO, right? Or since its direct listing.
That's everything has all these 2021 IPOs have just gone up and then tanked below their IPO, whether it's a direct or a regular IPO. We can take a look at it.
I agree, Skippy. They do need to release something. They can't rely on Red Dead Redemption 2 and GTA 5 forever. But right now, it's been working for them. They also have, of course, 2K, like the basketball game, which unfortunately, I think this past year's 2K was like not very well received by fans. I don't know if they just didn't change anything or what, but that is a massive franchise that they're also able to raise revenue from. So yeah, Roblox, Take-Two, Activision, which of course owns and runs all the Call of Duties, which Call of Duty Warzone has been huge.
Dude, Take-Two is huge. Look, they've got Rockstar. Rockstar's got a ton of companies under.
Right, Rockstar's the one that produces Grand Theft Auto.
Right.
So,
but they also have Red Dead 2. They've got a ton of games here. It's not just they're not just relying solely on these. Like there's other stuff that.
Right. Well, a lot of these games are really old. Like that Bully game has been out. Was out 15 years ago. All these old Grand Theft Autos. So they are a little.
But the thing is, when they do drop a game, that's the difference. Is when they do drop a game, it's massive. Like I remember GTA 5 came out. I think it was my first week of freshman year in college was when that came out. it like broke records. Like I think it was $1 billion in sales the first week. It just does numbers.
Oh, Lee Pilgrim's making a good call saying he holds the Nerd ETF, which has a lot of these gaming companies in it. That's a good way to play these. I mean, look, the video game industry isn't going anywhere. So if you want to get exposure, the ETF isn't a bad way to go. I'm sure there are multiple video game ETFs. Microsoft, Sony, those are good plays as far as the actual console. Chris Kachi, who's in the chat, he pitched a really interesting one a while ago, Immersion, ticker IMMR. And so what this company does is it makes the haptics inside the controllers. So you have, when the controller vibrates when you shoot someone or you get hit and the controller will vibrate. This company has that, and I think they have patents on these certain haptics. So like the PlayStation 4 controller or the PlayStation 5 controller can do certain things that the Microsoft Xbox controller can't. And so eventually the idea is that Immersion will get more clients because people want these things in their controllers. It makes the game more immersive. No pun intended, because that's the name of the company. But, I think this stock's been kind of beat up, but it's an interesting play. So if we see, I'm looking at the chart, if we see it start curling back up from this like long sustained bottom, then it could be a really interesting play.
Could get quite interesting. Yeah.
I would want to see it kind of curling back up before I enter it. But I do think
they've doubled their cash reserves essentially, which is good. That's good. I always like these companies to have cash. Revenue went down, profits went down, which makes sense. I think they're dealing with a parallel issue in the chip shortage space, which is why like you can't find a PlayStation 5 or the new Xbox anywhere. So until those production numbers ramp up, these guys are going to be in trouble too, because they're kind of dependent on the production of the consoles to make money.
Right. Well, I love, Ryan, how you're able to look at not only the chart, but the financials as well. So you can get kind of best of both worlds, get some fundamentals going, get some, technical analysis going, and really just try to make an educated decision on a stock based on that. So let's see, we hit Roblox, we hit Take-Two, we've hit Immersion, we've hit some good gaming companies. What is AB gem position? I don't know what that means. Is that a stock?
I think he's asking like what's your biggest position maybe? Is that what he means by gem position?
Right now it's probably Nvidia.
Interesting.
It's been that way for a while. Split. Oh yeah. I love Nvidia. My favorite stock.
I'm surprised they took a bit of a fall today, which is surprising. I was expecting more of a run up for 2 more days and then a bit of a drop, but they took a drop. And it wasn't that bad either, to be honest with you, but they did very well yesterday, and then today they took a bit of a drop, but it wasn't nothing massive. But it's holding this support line right here around
historically, my biggest position has always been Apple, but I recently in like the year from last September to like now, when Apple was trading sideways for a long time, I kind of sold some to just get into some things that I thought were going to be moving, because it didn't look like Apple was going to be moving. And of course now that now that I sold Apple, it started moving up. And I it would take a lot for me to all of a sudden like not like Apple. I just think, hey, look, for the last 20 years, Apple and companies like Apple, Microsoft, all these companies have been like the best investments for the past 20 years. It wouldn't surprise me if going forward the next 20 years, we see some of these more disruptive technology stocks have a little bit more growth than what are now kind of like the blue chip technology stocks. But so far, it hasn't really looked like that. I mean, it looks like Amazon, Apple, all these companies are going to keep ripping.
Yeah, I agree with you. I think Apple will make it into the next decade. I think Amazon will definitely make it to the next decade, because if you watch them, they're always consistently adapting. Apple is always late to the game with smartphones and smartphone tech. Android does it, then 2 years later they do it. So that's a conversation for another day. But we'll have to definitely see how this thing goes, because it's interesting to see how we go into the next decade. Does FANG still dominate? Or is there a new party that joins it? Is there like another group of stock that kind of take over the world? Unity, by the way, the one that you just put up, that's the gaming company I've personally invested into. I like that one a lot.
I'm not in Unity personally, but I know Kathy Wood is in Unity. Honestly, I don't really understand the company that much, so maybe that's why I'm not invested into it. But
so let me show you.
Okay.
They work a lot in the 3D realm of things as well, which is why I like them. So it's also not just a gaming play, but it's also a VR, AR, and 3D gaming play, which makes things very, very interesting. So let me see.
Speaking of, Ryan, I mean, we spoke about this months ago that I had like calls on Facebook based on their Oculus, and I think that honestly is a pretty decent gaming play too. Yep, there you go. I mean, Facebook's Oculus department is fast. I mean, we pulled up the numbers last time we talked about it. That now, like, I want to say it's like over a quarter of the Facebook company's employees are working on the Oculus, on the AR, VR, and it looks like the Oculus is just far and away ahead of other.
That's why I've kind of I'm hedging. This is a stupid way of putting it, but I'll say it and people can laugh. But I'm hedging my Apple position with Facebook shares because I think that the next dominant realm of mobile won't be cell phones anymore. It'll be wearables. And I think Facebook is getting there much faster than Apple is with wearables, with things like the Oculus, with their AR glasses that they revealed last summer. So I think that Apple is going to get there. They'll eventually put something up, but I think Facebook will beat them to the market when it comes to that. So in the next 10 years, when we move to AR glasses, instead of our phones, it'll be AR glasses, a smartwatch, whatever else that's there, Bluetooth headphones, we'll have no need for the cell phone anymore. The cell phone will just be an auxiliary package or like a battery, external battery. But at that point, we'll just slowly phase that out. If you notice now, people use their smartwatches on their wrist to answer text messages, calls directly to their headphones, and then you really don't need a cell phone anymore at that point, and you can just have like the glasses. So we'll have to see how these things play out. It's very interesting where tech is going. I think everyone thinks they knows where tech is going. You have the Kathy Woods betting on one side, you have the Warren Buffett betting on one side, you have other investors, big time investors, the Ross Gerbers betting on another side. But we don't know yet. So we'll have to see how these things go out over time because humans change, technology changes. Like tomorrow, someone can come out with something that changes the whole wearable space completely.
Yeah, and I mean, I do like how Facebook is kind of investing in this R&D in the space because it is looking to be like a growing space. And if they can establish themselves as the leader in the AR, VR space, then I think kind of there's a very high ceiling for Oculus. What could be interesting, though, which there are talks of it, I mean, if there are antitrust issues and Facebook ends up getting broken up into different companies and you have WhatsApp, Oculus as its own company, I mean, I would buy shares of Oculus even if it were.
Yeah, I doubt that happens. I think those guys have, like, talking to people like Larry, who's like my outsider. I call him my outsider information source instead of inside information for the White House stuff. Those guys have greased so many senators and representatives and everyone in Washington that I don't think that kind of stuff will happen. They talk about it, but if you come down to it, they're not a monopoly. I don't see anything that can cause them to be like, hey, these are just different companies we have, and they compete. And they compete across the market. We've got tons of competitors, like WhatsApp has Telegram and all these other apps that are out there. Or Oculus has like Unity. You compete against Unity, and you have other companies that they compete against. So I think
I don't think it'll
be interesting to see
anytime soon, but it's a possibility, right? I mean, we could see.
It's one of those things you keep in the back of your head as a bear case for your Facebook stock, because that would drop your Facebook stock value. Because I don't invest in Facebook for the Facebook platform. I couldn't care less about Facebook or Facebook's ads. I'm investing into it because of Oculus mainly. That's the big thing for me. It's that VR, AR, 3D tech play. That's the main reason I invested into Facebook. And sure, they make a ton of money from ad revenue based off their ad engine and their network platforms, but it's not the Facebook platform. I couldn't care less about the Facebook platform.
Agreed. I mean, that was my thesis when Ryan, was funny as I remember last time we were talking about this, I was buying like, I think $305 calls or maybe $310 calls. And now the stock's at like $350. And I think a lot of that movement is a lot of it was based on really strong ad sales and ad monetization. But a lot of it is the Oculus aspect of it. And I think once we start seeing like the financials just coming from the Oculus department, we will see some really good. I mean, the valuation, I've seen some crazy numbers saying that like what the market cap would be of Oculus if it were its own standalone company. And I think right now, maybe it's a little bit more properly valued now that Facebook shares are 340, but I still think it's being overlooked and undervalued.
Yeah, Facebook's almost $1 trillion company. I could see Facebook getting to $1 trillion company by pushing Oculus. I think Facebook gets $1 trillion company within the next 2 to 3 years, but they're very, very close, very, very close. And the stock was held back due to fears of this whole antitrust situation. You could, like back when we were discussing it, you could see here, thing was trading sideways forever. It would come down, trade sideways, go up a little bit, then come back down, trade sideways, and then we finally had to break up above 300. Like, if you remember, we were doing the show together. At that point was when we were live together the whole show. I was like, this thing under 300 is a steal. I'm buying every chance that I get.
Right. And I mean, I remember
the sucker broke out.
That was months ago now, but it feels like yesterday. I remember it perfectly. Let's open up to the chat, see if anyone else has any interesting plays. Doesn't have to be in this field. We can look at other. I see Fubo getting talked about. We talk about Fubo a lot on this stream. I've given my kind of bull case for Fubo. I do hold Fubo. It's one of my actually bigger positions in my Robinhood portfolio. Mm-hmm. Which I was actually. So if you zoom out on the chart a little bit, I want to see. So I think I bought it right around in March or so of this year. So if you go back to in March, it was
around the drops in March here.
No, it was when it was higher, actually, maybe a little bit before then.
In the 30s or 35s?
Yeah, I bought it in the 30s, and I was red on the position for like so long, and then I bought some more. I averaged my cost in the middle of May. So back when it was more closer to like $20 a share, and I averaged my cost, and like finally, like 3 months later, after buying the stock for the first time, my position was green.
That's good. Yeah, I like Fubo a lot, man. I like Fubo a lot for their sports thing. I think they get acquired, though. I don't think on their own they'll be there. I think their plan is to get acquired, and I think it'd be smart for a company like Disney to come in and acquire them, especially if the gambling space expands. Disney needs a company like Fubo. So I think it'd be smart for Disney or Netflix, one of those two, to come in and acquire Fubo.
Well,
Netflix needs a sports arm.
Disney actually holds a stake in Fubo right now, currently.
Yeah, that's where the Disney idea popped into my head. It was like, okay, I think maybe they open up their kind of like, because Disney also owns a stake in Hulu. They own a 33% stake.
Yeah, I mean, Disney, look, it's smart for Disney to kind of get exposure to those different streaming platforms. I think Disney understands the importance of having ownership and rights over some live sports. That's why they went out and bought ESPN. They own ABC, which broadcasts a lot of NBA games and all this stuff. And at the bottom line is like live sports is becoming the premier moneymaker for like TV networks, because no one watches anything else live. The only thing that people watch live are like sporting events, presidential debates, things like that. So advertisers will pay a pretty penny for commercials for live sporting events that they won't be willing to pay for during like a rerun of Friends or whatever, because people know that, people are just going to go watch Friends on Netflix. They're not going to be watching it live.
Exactly. Because no one watches, very, very few people watch reruns of sports events. It's like live done. And then by the time you get the home to actually, if you want to, like, I remember back in the day, people would tape the sports event. Be like, all right, I'm going to Uncle Joe's house. When I get home, I'll watch the sport. By that time, the tweets are already out. You can't avoid it.
Exactly.
Whereas back in the day, you'd have next day's newspaper. You had enough time between when you got home and next day's newspaper to kind of see where it is. But now it's like tweets are coming out. You got Twitter's got like their sports section. That's where I see all my sports highlights. Especially with like things like the World Cup and soccer gaining such a dominance here in the U.S. now, Fubo has a very, very bright future for those that are patient with it and can hold on to it and be patient with it. I think it's got a bright future. Personally, I don't hold a position anymore. I bought it around a long time ago when we were in the 10s was when I bought it. It kind of had its run up into the IPO, then came crashing down, was trading sideways. There were some signs I was seeing a lot of chatter about it online. I said, all right, I'll buy it. I bought it, sold some near the top in the 40s and 50s, came back down. I was like, man, I should have sold everything when it ran back up again. I got rid of my position, but I do regret not picking it up back when it was in the teens again. I think that was a stupid decision on my part, not picking it up. And if I get another opportunity in the teens, I will pick it up, because I think it's a fair valuation between 15 and 20 for this stock based off of just like very, very quick numbers. I think it's fair there. Now, again, they do have a lot of room for improvement. Their profits are quite low. Their margins are terrible. Balance sheet's fine. I take it back. Balance sheet's fine, but their margins are terrible, and they need to get this up. They need to get
I think with an early stage kind of growth company like this, it's kind of like looking at the financials can be a little.
Oh, of course, yeah. That's why you have to look like 5 years ahead and say where they're saying they'll be in 5 years ahead. Depreciate that a little bit, because you know how excited people get in their investor presentations, and then take it from there. But no, I completely agree with you. I completely agree with you, especially with soccer's dominance here in the States. This is going to get much interesting. And the only reason I'm seeing soccer's dominance grow is it's a generational shift. When I was going to school, a lot more people were playing soccer than playing football. And we're seeing that those people who were kids then now become adults, and now they're watching soccer. You're seeing the Euro Cup being discussed about more. You're seeing Copa Euro, which is the Euro Cup, being discussed more. The what is the event? What is the soccer event every 4 years? I'm blanking.
World Cup.
World Cup. There you go. You see the World Cup discussed more. So it's very, very interesting and exciting.
All right, Ryan. Well, let's see. Let's take maybe one more ticker out of the chat. Sure. I know you've been on for about an hour and a half now, so I want to make sure, just give me the word and we can kind of wrap up whenever.
Sure. I'm good. Do you want to pick the ticker or do you want me to pick the ticker?
Let's see. I mean, I see a couple of different people talking about BABA, but I'll let you pick it if this is going to be our last one. This is your show. You've been going for a while. So, yeah.
All right. I'm seeing BABA a lot, but we've discussed BABA so much on this show.
We're getting Carnival Cruise Line, CCL.
Let's do Carnival Cruise. That's actually quite interesting because Carnival is going to be parallel to how I see a lot of our recovery plays go. So Carnival is quite interesting. Here we go. Carnival shares are trading higher amid a rebound in reopening stocks. The company said it expects to operate 75% of the fleet capacity by the end of 2021, which is very interesting because it matches a parallel to the statement they put out a few months ago saying that by October will be operational. They said 50% then, so jumping it to 75% makes sense and reflects the jump in the stock price. So I don't know. Personally, I don't know how cruises are going to do after such negative sentiment, but it looks like it's jumping back up today. At least it had a nice 7.45% day, but this is the recovery play that runs up and gets beat up and then runs up again. But this is the first one that kind of tanks when you start hearing a lot about like COVID fears kicking in. Once like the Delta variant was being discussed, this was one that was like one of the first to go. This and Boeing, just like those two just tend to just fall. They just don't want to stay up.
Yeah, I mean, cruise is definitely not good for the Delta. I mean, if there's any fear about a variant of COVID, who wants to get on a boat trapped with hundreds and thousands of other gross germ-bearing individuals?
Yeah, and on a boat, which is the worst part of like.
I mean,
it's already gross as is.
I remember when the COVID pandemic like first hit the United States, there was what cruise line had a
Carnival.
boat that had one where they were like quarantining the people on the boat, and they literally couldn't even get off the boat. I mean, that just sounds like a nightmare.
Yeah, I think it was actually Carnival.
But there were also people back last March that were saying, "Oh, cruise, we're never going to see cruises again because that doesn't end up being true." So
no, the demographic for cruises is still there. They'll be fine long term. This is the thing. People are scared of things, then they forget, and then they come back. Kind of like when there was this virus that came to New York. It was not SARS. The one that was a few years back. Zika, yes. When Zika was happening, someone with the Zika virus went into like a bowling alley and played a few rounds and then left, and that place was like quote unquote contaminated, and everyone's like, we're never going to go bowling again. 6 to 12 months after it, when that died down and people forgot, everyone went back to bowling. So it just takes people forget.
Yeah, so go back out, like zoom out on the long-term chart. Where was Carnival before pre-COVID? Is it like $30 or something?
No, it was much higher. It was in the 50s.
Oh, wow. But see, look at that like sustained downtrend even before COVID. And that's when the markets were really hot.
This is the thing. Carnival can act as like a leading indicator to see how markets are going to react to COVID and see how some stocks will shift to COVID. These guys were the first ones starting to depreciate. Now, I don't know if there was an earnings call somewhere around here. It had to be a Q1 earnings call would be what I would imagine this gap down happened.
I'm talking about just from like if you look at from like the stock even before the COVID crash is in, there's that little uptrend before, but further back, if you go back, you see that downtrend into the COVID pandemic.
I see what you're saying.
And the market sloped down. Right. And the market was really strong then. So that's not a great sign to me. But what I would say right now is, look, if you want to go buy some Carnival Cruise Line, be willing to take a hit if, we do see these Delta variant cases go back up or COVID fears continue. It could get hit in the short term, but in the long term, I do think we'll see it creep back up to the pre-COVID levels of $50.
Yeah, very long.
I don't know if we'll get all the way up.
2023. 2023 you might get there, and that's you got to account for inflation, and you got to account for you're leaving your money in there in a stock that's shaky. Personally, I think there's a ton of other great opportunities out there. Myself personally, I wouldn't invest in Carnival unless Carnival came down to these levels here, which was what was this the teens, the low teens is when I would invest in Carnival and just use mainly it'd be a swing trade because like at that point it'd be so oversold. People would have to come in. So you have puts. Okay,
yeah,
so
she's not going to get mad at me saying that I think it could go down in the short term because, I mean, you know, I was worried when you were asking about CCL that it might be that you have a long position in it. It's like, could get a little dicey here over the next couple of months. I mean, I don't know. I'm personally kind of not trying to be too worried about the Delta variant. I mean, I'm vaccinated myself. I did see, however, I got the Pfizer, that the Pfizer might not be as effective against the Delta as some other ones, but I think it'll just take some time to kind of see how this all plays out.
We should just go get all the vaccines and we'll have all of them, like kind of like the Infinity Stones, and we'll just have the Infinity Stones equivalent of like the vaccine, then we'll just be completely fine.
Yeah, exactly. All right, Ryan. Well, I think that was a great episode. I mean, if you have anything else you want to talk about or add, but this has been
good.
Kind of a marathon episode. We've been going on for 90 minutes now.
Yeah, Tuesdays we go a little longer because there's nothing at 6 p.m. So I just hold them here and I keep talking to them till like 7. But yeah, no, guys, thank you so much for watching. I had a pleasure. Thank you, producer AB, for coming on. If you enjoyed this, do us a favor, like, subscribe, hit the bell button to be notified of new videos as they come out, especially when we go live. You can follow me on Twitter or you can subscribe to my YouTube channel. Everything is linked in the description at ryanstocks.com. If you want to learn how to do technical analysis like this, I teach it in my Patreon through the private Discord courses that I have there. You can sign up for that too, linked in the description. I'll be more than happy to have you guys in Zinger Nation. As always, thank you so much for coming out and watching. You guys are amazing. I'm still flabbergasted at how many people show up to watch this show. You guys are awesome. Thank you so much. And producer AB, thank you for guiding the ship.
Smash the like for Ryan going through all the stocks. I joined in late, but I'm dropping Ryan's Twitter in the chat, so go give him a follow there. He's always dropping good DD and good research there. My Twitter is there as well. So yeah, y'all, we will be back on Thursday for another episode of After Hours with Ryan Rozbiani. And with that, we do have the Netflix earnings call streaming, and this video will direct you straight to the Netflix earnings call. So if you are interested in Netflix, and not only just Netflix, Netflix earnings will give kind of a preview to what to expect for Disney, for Roku, for some other companies. So it is a worthwhile thing to watch this earnings call, and let us know if you have any questions.
Thank you guys so much. Thank you, producer AB. See you folks later.
Peace.